Hello everyone, I am your host Amartya Singh, co-founder and CEO of Finflow, a product built by and for modern finance teams. We are back with the third episode of our podcast series Inside the CFO Office, an exclusive channel for finance professionals to know more about the journeys of finance leaders and trailblazers in the CFO office and the biggest challenges they have faced and solved, and their take on the future of finance. In today's episode, we are super excited to have Josh Troy as our guest to share his journey with us and his experience in building and scaling finance functions at high growth software companies. Josh brings over 15 years of experience across leading business and finance teams within diverse industries, including real estate, advertising, AI, and health tech. He has played pivotal roles in multiple growth stories and acquisitions. Currently, Josh serves as the CFO at PatchRx, a leading medication adherence platform. Prior to this, he co founded Urbint, focused on leveraging real world data and AI to prevent critical incidents. Prior to that, Josh held finance leadership roles at Spotad, Comstack, and StreetEasy, where he led the company's $50 million acquisition by Zillow. So I've had some great conversations with Josh where we spoke on the role and evolution of finance leaders and finance tech at high growth software companies. Especially his insights, thoughts on how finance leaders have been engaging with technology has been a real revelation for me. I've really enjoyed all our conversations. So I thought, it's a great platform for everybody to know the journey of Josh. So welcome, Josh. Great to have you with us
Appreciate the
at the
opportunity to be
podcast.
here.
Thanks, Josh. So I think let's get kick started. I mean, you've had a phenomenal experience across different
Thank
industries
you.
and finance functions. I mean, it requires a special level of talent in terms of context switching across so many different roles and industries, different shapes and sizes of industries, right? It must have been really exciting to work across these industries and teams. So, we'd love to know more about your journey of working and leading finance teams across industries, right? From real estate and advertising all the way
Sure.
up to AI and health tech. So, over to you. Love to know about has been your journey across these
Sure.
industries.
So I think as part of the journey, sort of you have to think about the foundation, right, and kind of where it all started. And for me, that was a general interest in business operations, and business models, and how businesses work, right? What makes them successful? How they market themselves, how they position themselves, strategy, just all those things, right? There are a lot of different aspects of building a business, obviously. But what was most critical for me in thinking about business and just like the fundamentals was the scorecard, which is ultimately accounting, right? So I studied accounting in undergrad. I got my CPA here in the state of New York, and I wanted to build a foundation based on understanding the scorecard because at the end of the day, businesses are made up of people, but they're business entities and they're measured by their financial performance, right? The objective in a corporate society is to make money. And the best way to measure that is with the financial statements and your bank account. And so for me, building a foundation in accounting and financial operations was pretty critical to thinking about just long term where I wanted to be as part of my journey, building, leading, growing finance teams, finance operations, and businesses at large. And so after I studied accounting, got my CPA, I started my career at KPMG in advisory consulting, learning and working on internal operations and internal audit. Crossed over a bit into external audit as well, and really liked the intersection of those two areas to understand sort of the financial operations associated with accounting and reporting, but then also what it meant to have accurate financial statements and appropriate accounting transactions. And so worked with a handful of different companies in different industries here in the States, also in Europe, to get a different perspective as well. And yeah, so I was at KPMG for 4 years. In the back of my mind, though, knew that I wanted to be on the operating side, right? So there's the investor side, there's the advisor side, and then there's the operator side. And for me, the building aspect, the creating, what was most exciting. And so I joined StreetEasy as their first finance hire back in 2013. They're at the time they were and they still are the leading residential real estate website here serving New York City. And part of the reason they brought me on, I was employee number 35 or thereabouts. They were post Series A. They were looking to grow, expand into other markets, and they needed to mature the finance function. And it was, time to bring on somebody dedicated to the role. Previously, the CEO had been doing some of it, the COO had been doing some of it, but there wasn't a dedicated function. And I think that's kind of there's always this kind of critical juncture in a company's life cycle where they say, okay, we need to make an investment and a commitment to bringing somebody on internally full time in house to run our financial operations. And I think in today's operating environment relative to where things were a decade plus ago, that timeline has actually been pushed out farther and farther. And also, I think the requirements of the role, particularly for high growth companies, are different now than they were a decade ago, right? I think a decade ago, you really wanted somebody to manage the books, to manage financial operations, and while that's still critical, I think the role requires a more strategic lens today than it did then, because so much of those workflows have been augmented and automated by technology. And so when I stepped into the role, the initial expectation was to raise a Series B and to expand into other markets. We ended up getting a term sheet to be acquired by Zillow for $50 million, and we ended up selling the business within the first 4 weeks of having joined. So kind of a quick turn of events, and we rang the bell on the
Yes.
Nasdaq, and I mean it's a kind of it's not an actual bell. It kind of feels like Disney World going on an amusement park ride. A pretty quick change of events, and for me it was not what I was expecting. But I mean, as I think everyone who's been in the startup world has seen, is things change quickly, and you kind of have to be
Right.
prepared and ready for the unexpected. And that was certainly a lesson learned from that.
Right.
And so yeah, so sort of carrying that through just a little bit. I went from stayed on at what ended up being Zillow for about a year, helping transition financial operations, and then from there joined a commercial real estate data company in a similar type role in stage post Series A. A company was called Comstack. They were an exchange for commercial real estate data, and then they built a SaaS platform around that data composite and sold to real estate investors, developers, banks, etc. And in that role, put in a lot of sort of the core operations and metrics and financial modeling, as well as helped restructure some of our venture debt, explored some different pricing models, and grew the team, 100% in a year and a half, grew revenue 100% a year and a half, and just helped the business again mature and scale. Um, and then from there went to a mobile ad tech company called Spot which you mentioned, and interesting company. So they were
Yeah.
leveraging AI to use in mobile advertising. So this was back in 2016, really as kind of AI was starting to be a talking point and become more of a buzzword, but still pretty nascent, right? This was 8 years ago. And so what they were doing was using
Right.
machine learning to make predictions about ad placements in what's called real-time bidding, RTB. So when you pull up your phone and you're going on a website, oftentimes those ads are being served to you in real time based on your location, based on the type of phone that you have, and people are competing on that advertising unit. So maybe somebody's willing to pay 2 cents, or maybe somebody's willing to pay 50 cents based on your specific profile. And that ad bidding is
Right.
all sort of happening in real time. And so we were using machine learning, which was pretty advanced at the time, to make predictions about those ad placements. The company was based in Israel. We were the first mobile DSP, demand side platform, to launch in China. So we had connectivity to Baidu and Tencent, and
Right.
helped launch our office in the UK and in England as well. So international operations, we're the
Mhm.
exclusive provider of, or one of the exclusive providers of ads for Uber when they were really focused on their performance marketing and user
Right.
acquisition. Um,
Mhm.
and so I kind of give this context because for me, there is a thread of technologies that kind of connects all the dots for the companies that I worked with. So
Right.
from Spotted, I joined a pre-revenue company called Urbint, where
Just have a question, Josh, before we get into a bit. I just had one question that really interests me with regards to the acquisitions, right? We spoke about the acquisitions that you have had, right? And one very interesting point is the role of finance teams in these acquisitions. And would love to know a little bit more about how did you weave those acquisitions? I mean, what was the role that finance teams play? Obviously, there are tons of work which goes in the background, right? Like from what kind of term sheets that you are planning, the entire operations, the due diligence, leading everything. But what is typically the roles of finance teams? Would be love to know actually how have you seen the role of finance team navigate across these
yeah,
acquisitions?
so the role of the finance team is obviously is critical in a sale process, and I think that manifests itself in a few different ways. I mean, one, it's
Right,
being a strategic partner to the CEO to help create scarcity, to create demand outside of, if you have an inbound interest, you say, okay, how are we going to
right,
maximize the value of this inbound interest? And knowing that there's a
right,
finite period of time and, limited window in which often these deals happen without actually
right,
just shopping it around, you have to be very strategic and thoughtful about how to maximize the value and use a term sheet essentially as leverage to get the best deal. And so there's that angle
right,
of just like of creating the most value in the term sheet itself with other potential interested parties. And then there's obviously the negotiating of the
right,
term sheet itself.
right,
And that you certainly want to involve your counsel. You want to get feedback and understand what's most critical for you as a founder. What do you want out of this deal? Do you want to stay on, right? Do you want to leave? Are you saying, hey, this
right,
business is kind of here's packaged up in a bow and I can hand it to you on a silver platter? Or is there still
right,
work to be done, right? Because that's also going to inform the type of buyer and price that they're willing to pay
right,
and what the deal structure looks like. Businesses are
right,
obviously like ongoing, breathing entities, but there are different stages of maturity. And if a business is still nascent, right, and it's still just sort of developing its product and is still, even if it's at scale,
right,
but still, investing money in certain areas, there's a question of just do you want to continue for the journey as a founder? Are you going to be motivated financially and just intrinsically to keep building and to keep growing the business when you know that ultimately it's kind of out of your hands when you sell? So there's the kind of the question of vision alignment as well with the interested buyer, with the interested parties. And sometimes it may not be just the person or the business that's willing to pay the most, right? Maybe the next highest bidder, maybe they're 5% discount, but there's better vision alignment and better, maybe that's a better home for the business near term, long term. And so you have to kind of weigh those
right,
different aspects as you're thinking through it. So, as a finance leader, what is your role in that? In part, again, it's being strategic advisor, thought partner with the CEO. It's also being a liaison with your board, with your investors, and obviously as the CFO, as you have a fiduciary and a responsibility to maximize shareholder value, right? So that's always got to be in the back of your mind.
got it,
And then there's like the tactical aspects of, okay, you need a data room, you need to have a financial model and a presentation that positions
right,
business in the best possible light. And sometimes, again, like that positioning is going to be different for different parties, right? So understanding why somebody's motivated to buy your company and crafting a story and a
right,
narrative that aligns to that vision, aligns to their strategic priorities, which again is going to be different, right? So you may have a few different decks, you may have a few different models, um, but obviously you always want to put your best foot forward. And
Got
that is there is a balance between, okay, here's the bear case and here's the bull case, right? Like you can always make an argument for why you should sell a stock and why you should buy a stock. That's why stocks that are publicly traded have a share price that moves every day. And it's not dissimilar
right,
from a private company. And it's the role of the finance leader to help obviously sell the upside and be the optimist, but
right,
being grounded in reality.
right. Got it. Great, actually, a perspective that you have shared with regards to acquisition. I didn't expect it to be that detail oriented, but I mean, great to have the answer because now I know that there are so many different elements, so many different stakeholders. There's so many different negotiations going on at the same time. Like you mentioned about the three things, like the role of a finance, an advisor, and an operator. So when you are, working your way through an acquisition, all the three roles come into the picture because you have to be detail oriented, you have to be strategic and vision oriented, you have to play the right level of negotiation game, you have to keep everybody happy and working towards an acquisition. It's a great, thanks for sharing
And
your
the other, and just, yeah, one
anecdotes
other
on
thing
this.
before we kind of jump on to the next topic is you also have to keep in mind and understand what your cap table looks like. Because, depending on the way
Right,
it's structured, you might have somebody who has 1, 2% of the company, maybe they can block a deal,
right,
right? And so
right,
you have
got it,
to work with your legal counsel to really understand who has control, who you need
right.
to say, yes, like we want to do this, and get them to go along with it.
Got it. And there are multiple other aspects with regards to the culture of the companies and how the two companies work with each other. I'm sure. I mean, the your role does not end at the M&A, at the acquisition. It also continues
Yep.
for a long point of time in terms of figuring out how the future is
Yep.
going to work out.
And as a CFO, as a finance
Yes.
leader, you kind of have to be as objective as possible. You really have to take yourself out of it because oftentimes the finance team and the back office operations are the first to change, right? And that's kind of the expectation, right?
Right.
If you're
Right.
a CFO of a private company being acquired by a public company, odds are, there's not a
Right.
role for you as a finance leader, and that's okay, right? But you have to, and
Yes.
then there's this other aspect of, well, you still have to protect yourself and you still have to look out for your own interests,
Right.
but you can't put that above the
Right.
interests of the business.
Got it. Great. And now coming back to your experience in Urbint, I think that has been a great growth story. Urbint has done really well, and you must have had a lot of experiences, great experiences to Urbint. You were talking about Urbint when I asked you the question. So, love to know about your experience at Urbint. How has it been, and how has it
Sure,
been
sure.
post
I
that?
mean, Urbit was a fascinating journey, and for me personally, professionally, it was a hard journey. It was definitely not easy. Building a successful business is not easy. Building something from the ground up requires hard work, and it's a roller coaster. And you feel like every day you're living on the precipice and the brink of success and failure, right? There are 100 things that could
Right.
go right, and there are 100 things that could go wrong, and any one of them could make or break your business. And you're living on that
Right.
edge really every day. So you have to find ways
Yes.
to stay sane, to stay healthy, to stay grounded, but also just really keep your focus and keep your priorities straight, because it's also easy to get pretty distracted. And but yeah, so for me, so yeah, joined again pre revenue, head of finance and operations, grew into co-founder, CFO role. We also, so the business originally, the idea was taking data about the built world, so building data, environmental data, geospatial information, pairing it together, building this composite model, and making predictions about things. So for me, it was kind of an interesting overlap of this real estate background that I had in AI and making predictions about things, and that kind of the two of those were coming together nicely. And so initially, we were making predictions about buildings and surfacing data and insights about buildings as kind of the infrastructure class. And as we were going through building this data set, we identified through some of our conversations that there was another interesting application of our technology where we could actually make predictions about assets other than just buildings. So we were introduced to Con Edison which is the electric utility provider for Manhattan and the surrounding New York City areas. They're actually the oldest publicly traded company in the United States, which is kind of interesting, and or one of the oldest. And so we were trying to get some data from them. They said, we've got this other problem identifying corrosion on gas lines. Maybe you could help us. One thing led to the other. We got some data from them to predict corrosion surfacing on gas lines, because utilities are required to inspect their gas lines every 3 years. And it turned out we were able to
Right.
predict that at a much higher rate than they were able to with their own data, right? Because we were bringing in pollution data, wind, weather, the ratio of the building to the parcel of land, right? Just looking at all these environmental factors and building factors that ultimately contribute to this environmental condition, corrosion on gas lines. So we were able to successfully
Right.
do that. They paid us for that pilot. They introduced us to some other utilities. And then on the heels of that, we raised our Series A from Energy Impact Partners.
Right.
We're really just off to the races from there, focusing on developing solutions to predict and prevent incidents, and then ultimately workers as well. So we expanded our offering into worker safety to help predict and prevent incidents for assets and workers, for utilities and other field workers. And over the course of the five and a
Right.
half years that I was helping grow and build that business, we raised over $100 million from, again, Energy Impact Partners, Energize Ventures, and a handful of other leading climate tech, utility tech investors, Blue Bear Capital, Oil and Gas Climate Initiative, National Grid Partners. And I mean, for us, that was very strategic and very thoughtful in terms of who we wanted to have invest in us. And I think it's a model that's become increasingly popular, where you have investors and strategic investors who are also not just financially motivated, but also have overlap and connectivity to your solutions, right? And I think that model makes a lot of sense, and we were able to leverage that pretty effectively.
Great. I think, yeah. Yeah,
Oh,
yeah,
sure.
please.
So we raised pretty significant amount of money. We also faced headwinds with COVID, right? So we ran headfirst along with every other company in 2020 into COVID. We were in the midst of moving into a new office space when COVID hit. We were able to get out of that lease, move remotely, but frankly, COVID had a pretty significant impact on our business, and we had a term sheet for a Series B that ended up getting pulled, and I think the pre-money valuation got cut in half, really within a span of 4 weeks, just because, frankly, of COVID. And we
Right.
were, um, yeah, we were raising around, and everyone went remote, and everyone was like, "We've never done this before," and it was just a very quick shift. But when it comes to survival, and when it comes to adaptation, humans and businesses are pretty resilient. So we found a way to make it work. And so we raised our Series B in the spring of 2020, just as COVID was kind of taking hold, and then, continued building our business remotely. And it was a big change, but it also opened up the doors to hire engineers in Canada and Portugal and in other places, which for us provided some operational and strategic advantages as well.
Got it. And from the perspective we were talking about, being on the brink of success and failure, I'm sure COVID was one such event, to actually have gone through that event. One question here: how did you manage to, keep the team encouraged, keep yourself encouraged during this particular phase? I know it must have been really difficult because there are a lot of uncertainty around fundraise, and it must have been heartbreaking to have your, valuations, pre-money valuations to dip within a span of 4 weeks. How did you manage to encourage, keep the team encouraged and yourself encouraged, and the overall company going towards the right trajectory?
Yeah, it's tough. It's definitely, it's having trusting relationships, being
Right.
open, being honest, being transparent, but ultimately optimistic. I mean, if you believe in the vision, if you believe in what you're doing, then ultimately that helps carry you through. But
Got
I think fundamentally, if you're in the world of, then you are an optimist,
Right.
right? You believe that there can be something better than than currently exists or existed before, and you want to create essentially something from nothing. And so I think intrinsically
Right.
you're an optimist, and so having an optimistic, positive outlook really just helps drive you forward. And um, you have to just
Right.
keep going. You just have to take 100 no's to get to the one yes, and keep believing in what you're doing, and also know that, okay, hey, our valuation got cut in half, but we live to fight another day, right? Like that, it's not
Right.
that. I think having in mind the end goal, and the end goal is not necessarily just selling your business, but the end goal is delivering
Right.
value, creating a product and something that's sustainable and will stand the test of time. With that in mind, you just keep moving inch by inch, and also knowing that progress isn't measured in miles sometimes, but that it is measured in inches.
Right. Got it. Great. I'm sure that we were talking about your entire experiences across different firms and bits and pieces of the challenges that you have faced, the successes that you have had in terms of these organizations. Would love to know the top biggest challenges that you have faced in your career. It can be anything, but the two biggest challenges which you believe have been really big challenges, and how did you navigate them?
Yeah, so I think it's a good question. There are kind of two sides to that answer. I mean, on the one hand, I think as you grow and develop in the finance role, learning to balance the emotional and the subjective with the objective, right? Because, when you're pouring your heart and blood, sweat, and tears, so to speak, into something, you become very emotionally invested in it. And when you recognize that, hey, something's not working, or you need to make a change, whether it be you need to let go of a quarter of the company, or you invested in something and it didn't work, when it's your decision, when it's your thought process or people that you've worked with for a period of time, to come to the conclusion to say, hey, this didn't work, and you're John Smith, I'm sorry, you have to leave because I made the decision to hire you and I thought this was going to work, and then strategically it doesn't. Like that. That's not fun. That's tough, and you feel very personally responsible for that. On the flip side, though,
Right.
if you look at something objectively and say, hey, this didn't work, and it's if we keep doing this, we're not going to be a sustainable, profitable business. It's a pretty clear answer, right? It's pretty clear. And so I for me, we had to go through some of those ups and downs at Urbint, letting go of people that we trusted and worked with and enjoyed working with, but ultimately just weren't the right fit or didn't make sense strategically. And as somebody who's responsible for building a business, that's tough. But I think honestly, the more experience you have and the more perspective you have on kind of the objective, okay, this is why this doesn't make sense, it gives you more confidence and comfort in the decision, which may be contradictory to a decision that you previously made. And so
Got
going
it.
through that was, personally and professionally tough. Yeah. And
Got it. Right.
and then yeah, and the second piece of that is, when you believe in something and the data flies in the face of what you believe, it's kind of similar but a little bit different, of knowing knowing how and when to change course. And sometimes you got to stick through
Right.
it, but those moments are difficult when you say, hey, I believe this is the right thing, we're investing a lot of money in this, and we're not seeing the results that we expected, right? The conviction and confidence to say, hey, we're going to keep doing this, or we're going to go a different direction. um, those moments and
Right.
decisions are difficult, and there's no perfect answer. I think you have to get objective perspective. So talking to mentors, talking to advisors, talking to your board. As a finance leader, there's classic expression of you don't throw good money after bad. Um, and so knowing when to cut your losses on investments, I think is a really tough thing.
Right. I think the couple of major things, one thing you mentioned is that being objective about the things that are happening in the company, being able to take the hard decisions, and more importantly, being able to change the course, understanding if there is a need to change course or to continue in the course, so there should be a certain level of objective way of backing. So thanks for sharing the challenges that you have faced, and I can really understand because across your organization, across your professional career, you work across so many organizations, and each organization there has been such rapid changes in organization, right from pre-revenue to going to a point of post-revenue, raising rounds, going for an acquisition. There have been must have been multiple such decisions and changes which you must be doing on a day-to-day basis. It's very important to take stock of whether you are actually is helping you, or you should change course, or and that requires a lot of objectivity. And especially I think there's a lot of objectivity which comes from, and which should come for great organization, from the CFOs or from finance leaders, because they talk with data. They talk with whether the data is speaking, is actually telling you that you are doing it correctly or not. I think data backing, that insights and decision making is one very important of aspect of finance leaders, and that I believe has been responsible for your success and the success of the organizations that you
Like,
have worked with, right? Thanks for
one
sharing
other, yeah, one
some of
other
the.
comment. I think it's easy to think or to hope that it's black and white. That, oh well, in 3 months'
Right.
time we'll know. In 6 months' time we'll see X, Y, and Z, and we'll be able to say, okay, it's working, or no, it's not. And rarely does that ever happen,
Right.
right? It's more nine times out of ten, it's shades of gray. And you can have a list of sales opportunities and say, okay, well, we'll know that if we close two of these in the next 3 months, then okay, this is working.
Right.
And well, maybe three of those deals are in procurement, and maybe there's still
Right.
interest and engagement, and things take longer than you expect. And so I think you never have the precise clarity that you hope you
Right.
do. And so, as finance
Got
leaders,
it.
we do have to kind of, while we can leverage objective data, we still more often than not live in a world of a bit of ambiguity and a world of many shades of gray.
Got it. Great. Thanks, Josh, for answering the question on the challenges. Really good to know your approach on objectivity. Moving to the second last question, and this is my favorite question with regards to tech, right? Finance and tech. I have always been enthused by the adoption of finance technology softwares, and this is a two-parter. I mean, I'll break it down into two pieces. The first piece is your take on finance tech software, especially considering I mean, CFOs and finance teams work a lot with ERPs and accounting softwares like NetSuites of the world, Dynamics of the world, SAP, S4 HANAs of the world, right? So what is your take on the finance tech software? And the second thing is even more interesting question. You have worked in Urbint, you have really seen the application of artificial intelligence. Would also want to love to know your take on how you see the evolution of AI. So two short questions. The first question, your take on finance technology, especially ERP and accounting software, how they're ramping up. And second is, how do you see the AI overall evolving, the role of AI evolving over
Sure,
in the future of
sure.
finance?
Great questions. I mean, it's amazing how quickly the industry is evolving, and just what the tech stack of call it modern CFO looks like, or startup today looks like relative to what it did 10 years ago, 5 years ago. I mean, it's evolved so rapidly, and I think will continue to evolve very, very quickly. I mean, obviously, the launch of ChatGPT and large language models has had a pretty significant impact on finance and accounting operations. I think we've only obviously scratched the surface. I think it's going to continue to evolve faster and faster and faster. And so for me, I attended this AI for finance tech leaders a couple seminar a couple weeks ago. And if you pull your head back for a second and say, okay, like we put in this solution and we don't need to revisit this for 9 months, 12 months, or if you're just focused on other areas of business, you turn around and like there are all these new solutions out here, and how, why haven't I heard of this? And it's actually, I think it's going to be increasingly challenging for finance leaders to actually keep up with kind of the latest and greatest. And I think you could spend more time researching and implementing solutions than just operating the business, because the pace of change is going to
Right.
continue to increase so rapidly. And so I think there is a balance and a trade off between saying, okay, we've implemented something, it works, it gets the job done, and well, there's this new kind of shiny object and new solution, and yeah, we can implement that, but it's going to require a change in workflow. And so I think as a CFO, as a finance leader, you just have to kind of weigh the pros and cons of researching, implementing new solutions versus kind of keeping what you have. And I think, yeah, many of the functions will be automated, and I think finance teams can be lean in a way that hasn't been possible in
Right.
years past. I think you see it. Yeah, I mean, before you needed multiple maybe AR clerks or AP clerks. I think those roles have really gone away, and you just don't
Mm.
need, you can just automate it, right? You can forward an invoice to a system. Bill.com is really good about it, but there are a lot of other competitors that are out there now, Airbase, Brex, Ramp, all these payment solutions that are integrating sort of your typically what were distinct operating processes, right? You typically had T&E in one area, you had payroll in another, and your bill payments and kind of your AP in another, and then you kind of had credit card maybe payments distinct even from those other areas, and that's all those things are converging and being automated, and so you can do all that stuff really really
Right.
quickly and pretty efficiently with some rules and some structure in place. And so AI is really good at that, right? It's really good at looking at a transaction, understanding what it should be, and coding it. And so, and this is kind of dovetailing into your second question, but I think a lot of the back office operations, traditionally associated with, yeah, staff accountant, AR clerk, AP clerk, a lot of that stuff is going to be automated by AI and by technologies, and really that just enables the finance team to do more strategic work, to focus on more of the scenario planning, analysis, ad hoc materials, and focusing on investor relations and partnering with the business to strategize, to problem solve. And so I think that's a good thing for finance functions, because you can just operate in a way that really drives business value more.
Right. Thanks for sharing your take on this. A couple of things that you mentioned is the finance teams becoming more lean, and I mean we have also seen I have also seen in my experience across organizations, more and more CFOs and finance leaders really are looking for the optimization of teams, and more importantly the application of AI. For example, you talk about ChatGPT from a perspective of generative AI, or you look at predictive AI, or you look at machine learning. We were talking about a use case of machine learning. Across use cases, finance leaders in today's are actually more actively engaging with these kind of technologies. And one thing you mentioned, that you are wanting to build something, and 6 months later you say that I will do it after 6 months, and you go back 6 months and you see, hey, the tech should have been built by this time. Now we should have started seeing the efficiency inbuilt into the system. So that's a great point. I think you have already seen it with regards to the application of AI ML across the finance teams, and that's
Yep.
something really been exciting. And we are also seeing a lot of action over there, right?
And
And
the other, I
yes,
mean, just another area which is less of a, it's not an actual software solution, but I mean, these large language models, ChatGPTs, really knowledgeable when it comes to technical accounting, right? And so you can ask very specific technical accounting examples and questions, and it'll give you journal
right,
entries, right? It'll say, do this, do that.
Right.
And you can really, oftentimes you used to
Right.
go to your auditor, and it's, for certain things, it's not a replacement of that. And it's obviously ChatGPT
Right.
is not a CPA, but it's got all the knowledge there, right? And so you can ask questions and get answers to technical accounting questions that might have taken a lot of time before, a
Right.
lot of research, and you can get it in 5 seconds, right? And using it as
Right.
a resource in that regard is pretty useful as well.
Right. But I mean, actually, I loved it that the discussion was getting really exciting towards application of AI in general entry. But I think, I mean, we'll have to
Sure.
go ahead with the last question as part of the podcast, a little bit more personal. We have viewers keying in and listening to your experience. What would be the couple of top two advices that you will give to a person who's starting up from in a finance ladder? How do they grow to a finance leader,
Yeah.
become a finance leader?
Good question. It really is like there are a couple of ways. I mean, one, important to build relationships and have a network of advisors and mentors, both in the companies that you're working with, but also external, right? And I say that for a few reasons. I mean, one, just to get career advice and career feedback, but also because more often than not, the question that you're trying to answer has already been answered. And to the extent that you can leverage a network, be it a broad professional network or individuals, to say, hey, I'm facing this issue, what do you think I should do? Odds are somebody with some experience has probably faced that same situation before. So building a professional network and having advisors and mentors is super important as you think about kind of your long-term trajectory and career path. But also, I say that in the sense of like, businesses are built by people, and as a finance leader, you have to partner with other leaders across the business, right? You can't work in isolation. You're helping both create the scorecard, but also set the objectives, set the goals, do scenario analysis, manage investor relations, and help sell the story to the business. So, to the extent you can build those relationships externally with potential investors, with existing investors, it's very much a people role. As you and this is true in most areas of business, but I think in particular with the finance role is that you have to be connected with other people, and that's just really a really important aspect of the role. A second area of advice, I guess you could say, is focus on the details, right? So just be very diligent and know that when you're putting something forward, it's correct, right? Like, just be certain that whatever you're looking at, you look at the sort. And this is something that I think I appreciate, having been an auditor before. If you're going to put something forward, look at the source documentation, look at the underlying contract. Like, know that if you're sharing something externally with investors, double check, triple check. But as a finance leader, the fastest way, as a finance professional, the fastest way to undermine your credibility will be to present something that's wrong, right? So accuracy is really critical, and take pride in your work and be thoughtful in your work, and make sure it's correct.
Thanks, Josh. Thanks a lot. And I think I had a great time speaking with you on multiple aspects across your experience, across your journeys of leading acquisitions, of growing companies at as big as company as Urbint, facing the challenges that you're mentioning, right? Being ever optimistic as and when you build, and also I love the discussion on the finance technology and especially application of AI, and that's something really I'm also very excited about. And thanks for sharing your insights and thoughts, Josh. As we draw to the end of our today's episode of Inside the CFO Office, we look forward to welcome you all to the next episode. Thanks, Josh, for being a kind host to our session, and looking forward to being a part of more
Thank you. I
such insightful
appreciate
discussions
your
with
your
you.
questions. Enjoyed being here.
Thanks, Josh. Have a good day. Bye.